Good afternoon, everybody. Today is Wednesday, June 1st, 2011, and we are live here. So let's take a look at this market. The S&P 500, the NASDAQ, the Russell all got hit hard here today, obviously. We had a decent couple days rally coming in today, but obviously that all got destroyed pretty quickly here. The S&P 500 sliced not only through the 50-day moving average, but came down to this 100-day moving average, and we're really close to last week's lows as well. So this market has been really kind of choppy here the last month and a half, and some people can call them every single move perfectly. I can't, so pardon me for not having all the answers all the time here. But looking at the S&P 500 here, let's take a look at the weekly chart. We've still got an uptrend. It is giving us reason for concern, and it looked like it should have followed through here to the upside a little bit. It obviously didn't. We fell short of last week's high, or actually it was the prior week, by a couple pennies. And yesterday I think I was outlining the possibility of what I would have liked to have seen was a pullback that kind of held really in about the 133.5-ish area, and we created a right shoulder for an inverted head and shoulders pattern there. Obviously the market's not going to listen to my request or anyone else's request. It's going to do whatever the market does, and our primary job is to manage risk and to move aside when things get ugly here, or if you're flexible enough, agile, and are looking at it properly, then to get short and participate in some of the downside. So we have a little bit of resistance here near term at 135.10 basically. The big level for tomorrow is obviously going to be this 131.45-ish. That was basically where we closed this gap from mid-April, and where we found a little bit of support last week. My suspicion is that we would probably slice through it on the open and maybe continue a little bit lower before we start to look for some stabilization here. So obviously there's some big danger in the market right now. The market is really having a difficult time progressing forward. We had this pattern of lower highs, and then we were basically tied that high or came within a penny of it. So the market's in a difficult position, and what that tells us. What's the message of the market? The message of the market is that we have to lower our expectations, play a very strong defense, and realize that trying to pick a bottom or look for support at a certain moving average. I talk all the time about the rising 5-day moving average and how it tends to act as support, but I also talk all the time that you don't blindly put your bids in at a moving average. Wait for stabilization near that level. Now I gave a shot to the long side in here for a brief period of time based on a couple things. One was that 5-day moving average, and at this point right here I tried buying the SPY right in here because it was the volume weighted average price since this gap lower a week and a half ago. It was also a prior level of resistance which had shown support last week. We had sliced a little bit underneath that 5-day moving average, and then the S&P 500 futures contract was also right at daily S2 at that point. So they're kind of it's kind of mixed up by looking at the ES as well as the SPY, but at 1 o'clock Eastern time, you can see that's where those things kind of came together. I guess it was a little bit, maybe I was trying to buy over here, and that's actually what it was, is after it made that low, it was this second, I thought it was going to test over in here. Either way, the point is, it's okay to try to, look for a support level, but to try and, to hold it stubbornly, and, as I told subscribers, I was in the SSO, was looking for, or used a 10-cent stop, and that was it. So you're not going to make every move right, and the market isn't going to agree with our analysis. I made a point yesterday, looking at liquefied natural gas (LNG). Here's a stock that's been in a real nice uptrend, and really on the daily chart still is. And I was long some of this coming into today. I'd sold some, after the market closed yesterday in my trading accounts, and held some in an IRA. But even when you have a stock like this, I was saying it really needed to get above that $12 level to really get moving higher. That's where the momentum would come in. But I had held some of this in my IRA, and actually, I think I made the mistake of continuing to hold it. I think the stock will probably be okay, but it's definitely not my typical type of play. There's a lot of ways that you can justify holding a position. This prior resistance, held support, rising 10-day moving average, and that sort of thing. My suspicion is this stock will kind of bounce around in this area and will probably bore me out, and I'll end up taking my loss. It's not a loss that I'm going to suffer from deeply, because it's again, all we can do in the market is to control risk, and we do that by reasonable share size, and to take a look at reasonable share size, and to have stops in place, and realize that once in the market, while the market's going to give us an unlucky situation, where they announce a secondary gaps lower, and you've got to decide, do you rip the band-aid, or in this case I've decided to prolong my pain, and that's my prerogative. I don't think I'll stick around with it for much longer, but those are our options in the market, and we need to recognize the times when the market is making our job a little bit more difficult. Now is one of those periods, and when we have a large sell-off like this, it really should raise your awareness of risk. Now, we've had these types of sell-offs in this market here, some really strong sell-offs in this market since the low was put in 2009, and maybe we drop down to that longer-term trend line. It doesn't seem like it, but you never know. We have to look at it and say, if this level fails right in here, what's the next potential level of support down just under 130 that this market may begin to stabilize and then be able to recover and move higher once again. We're not in a bear market. There's nothing here that says bear market. Maybe we're transitioning. Maybe it's a little bit spooky right here for just the long side. But again, you have to learn to either step aside if it doesn't make sense to you, or look at the opposite side of the market. And when we have these markets selling off down to these potential levels of support, there's nothing here that says that these levels will become support. They're potential levels of support. 130 is a potential area. We'll see what happens. We could take a look at, what's the volume weighted average price year to date is something I like to look at, and that's really, let's take a look at that again, because we're basically right on it. So is this market just churning up in here this year? We're still up percentage wise, but it's basically going sideways. Let's take a look at that is based on a volume adjusted price. It's basically going sideways. The NASDAQ, since I've got the volume weighted average tool here on, we're basically right on that as well. So the market has been having a difficult time going forward, and here's what a true double top would look like: is point A, here's point B, C. We break a bigger trend line, and then break below these lows would be what the double top would be. However, that's going to give us an unrealistic downward objective. We have to look at it now as we've got resistance up here in this 59 area, basically, on the NASDAQ. We've seen, kind of this is basically, again, the volume weighted average price for the year. We've undercut the 100-day moving average. We've undercut this 100-day moving average a few times this year. A test of the 150-day looks imminent. I mean, this market could basically correct through time and turn sideways, and that 150-day moving average is going to meet up with it at about last week's lows here in the next day or two. So, there's no magic to any moving average. They often act as kind of a magnetic force field where where they kind of bounce from and find a lot of energy polarized into that area, but they're clearly not the level to kind of just stick your bid in and close your eyes and hope it works. Sometimes it does, sometimes it doesn't. That's, to me, not the proper way to do it. So we've got on a larger picture on basically the year to date, we've got this big choppy range. This has kind of been the midpoint of it, and the volume weighted average price as well. So it appears that after this failed attempt to recover and just finding resistance up at this prior important level, that we've been rejected in there 2 times now, and both times we've come off hard. Once with a gap, this time with just persistent selling in this area. So 58.50 is a really big level for the Nasdaq here over the next couple of weeks, and failure to get through that. Obviously, again, I think this is definitely something we're going to test, is these lows, the 56.30 area, and we'll see what happens from there. Is this setting up a larger sideways distribution? Now, the markets don't distribute for as long as sort of individual stocks often do. That is, they can pull back quickly, so we have to be alert. And last week's lows would break this little pattern that we've had this year of these higher lows. So I think it would bring about a larger, more fearful sell-off that we could test the lows for the year, which would bring us down near the 54 level. And I think that's a reasonable possibility here over the next couple weeks. It's we look for lately we've seen the good opportunities in this market have been presenting themselves to us in the individual names on the long side. At least that's where I'm finding the what appear to be the lowest risk, highest probability trades. I think that's going to start to change a little bit here, that we're going to get maybe a little bit more balanced long and short opportunities, but we can't look for those short opportunities after a 2% decline. So what we want to see if we're looking to get short is maybe a rally up towards 57.80, 57.70, 57.80, and then a failure there. But this is going to be a big line, I think, in the sand. $58.40. This, 58.40, 58.50 in the Nasdaq is a bigger line that, if we get back above that, then maybe we can recover nicely and continue to march higher in this longer term weekly uptrend. But the Russell 2000 was down 3.2% today, so that's a pretty big percentage hit, obviously. And we have what's looking like a lower high on the weekly time frame, and this has been a real important level here at about 80.75 ish. Let's just take a look in here on this. This general area has been an important level here the last several weeks, and if we take a look at the volume weighted average price year to date, we're still slightly above it. So on balance, the average participant is making money in these indexes, but it's really just kind of chopping back and forth a lot more. And we have to take this stuff seriously. This was the big level, the obvious level that got hit. That we got hit through last week. We had a recovery, and it's again those obvious levels. Often when they're broken, provide a push in the opposite direction. Now we've had this strong move off of that here on the Russell 2000. And the Russell's really been the messiest chart here over the last several months, as it's kind of just chopping back and forth. It's been a mess. I look at this thing and say, big giant mess. There's individual opportunities into individual names, and for day trading and that sort of thing, and 1 minute time frames, you can find some fantastic trends, and there's been some pretty decent little swing trade opportunities as well. But it's really been a more difficult environment for a swing trade type of scenario here in the Russell 2000. At least that's the way I'm finding it to be. The semiconductors, this isn't good to see. Obviously, we had that bigger level that we're we're aware of at the $37 level. Last week we really we broke that important level at 35, which was our 50-day moving average. Now this week, what did we have? We had a rally up to the declining 20-day moving average on diminished volume as well. And if we take a look at the 30-minute time frame, this was the area, this was the prior level, general area of, band of support that we had discussed. And let's just push that back a little bit further. So this was this general band of support that we had spoken about, and we pushed up through that and then came back down. This time it acted as resistance, and we had a persistence in that selling today. That's not a good thing. Maybe we get some sort of bounce in here, but you're gonna need to stand aside here for a little bit to really let this market decide whether it's able to find support in here. My suspicion is we're going to see at least a test of probably this 150-day moving average next here, and I would think by the end of the week, last time I said by the end of the week, I had it was in reference to that LNG though, and I thought that would maybe make it up towards 15. So, you have to look at it and say, wow, does that mean I suck at analysis and what might happen? Not really. I don't think it's that way. My P&L doesn't indicate it. What it means is that despite how we look at this market and what we think is the most likely scenario, the true job of a successful trader and investor is always risk management. We can't be searching after the fact, what was the news in a stock like CIGX. CIGX has been, last week I spoke about this, and it was a fantastic uptrend. But then that uptrend broke. We had this pattern of higher highs and higher lows interrupted, and then the stock sold off. Well, the people I think who are searching hardest for the reasons why a stock sold off so hard are the ones who are probably still holding it, meaning that they didn't have an exit strategy. They saw nothing but blue sky. They figured, hey, I've got this great stock, and it's always been, for me, I like to say one of my biggest mistakes is that I always get out of a trend early, but I avoid most of these types of scenarios. Once in a while, like I said, with LNG, you get a little bit blindsided and then further complicate the issue by not taking immediate action, is what I did in there. I'm probably I will rectify that in the next couple of days in my own personal account. Financials, they've been in a downtrend. They've found resistance at the declining 50-day moving average. Just this recent rally at the declining 20-day moving average. This group has really been the leader to the downside. They've been in this choppy downtrend. It's actually, when you throw a trend line on it, it's really not that choppy at all. And it's these rallies in this downtrend have been guilty till proven innocent, and we're getting these fearful sell-offs. We're down. We undercut the obvious 200-day moving average last week. That led to a little bit of a squeeze, and people figured, well, hey, the 200-day moving average, we did find support there. These markets, are going to need time to heal this damage that's been done. As far as individual names go, I'm not going to take a look at any stocks here today, because I think that, again, we have to let this market settle in before you can really look to here's what a low risk setup is looking like. Because I think that on the long side, we have to let them kind of settle, the market settle in before we can really trust the market. If you're going to be trading the long side here in the next couple of days, you go lighter share size and have lower expectations. And on the short side, you have to look at it and say, well, wait a minute, do I want to be the guy that sells short after it's already down 3.4%? How has that resulted in the past when we have these big down moves and then I get short? Those are the decisions that you have to make for your own personal trading. We all make mistakes. No one hits this right. To imply every time, that is, to imply otherwise is just insane, really. We all get our bumps and bruises. Hopefully you guys didn't get bruised badly today. And if you keep money management as your number one tool, your number one technical tool, not an oscillator, not an indicator, but where's my P&L, where do I cut the loss based on a stock breaking through support and moving to the sidelines and reassessing, Believe me, you're going to be ahead of 95% of the participants in this market. That's the real secret for success, is money management and risk and money management. One and the same thing. Thanks for tuning in.